Hey everybody, in this video I'm going to talk about an indicator called the linear regression channel that you can use in order to assess the state of a stock fairly accurately. So first, I'm going to talk about how you go about calculating the linear regression line and the channel itself. And then I'm going to head over to the charts and talk about a strategy to find swing trades. So with that being said, let's start out with calculating the linear regression channel. So what you're seeing on the left side of the screen is an online graphing calculator, and what you're seeing on the right side is just a notepad so I could visually explain what I'm talking about. So we have this data set. Let's say that X is equal to the hours after market open for a specific stock, and Y is the price of that stock. So at market open, the price of the stock is 68 cents. 1 hour after market open, the price is 90 cents. 2 hours after market open, the price is $1.66. So let's graph it. That looks like a general stock market graph. So how do we go about creating a linear regression channel for this? Well, first, we're going to add a line of best fit. So a line of best fit is essentially a line that goes through data points which expresses the correlation between the X and Y axis. So what does that mean? So a line of best fit through this graph would essentially be what was the average growth of the price of the stock in regards to time. So we can easily calculate that by just putting an equation up. So let me drag this. So this is the equation. This is like the notation for line of best fit, and let's graph it. So we have this black line, and that's like the line of best fit. So let's write the slope of the line on the left side. So here it says the line of best fit is y equals mx plus b. It says m is y, so m is 0.330333x plus, and b, it says it's 0.8, so it says 0.0.8000833. So that's the equation of this line. So how do we go about graphing the top and bottom channels of the linear regression trend? Well, for that, we're going to calculate the standard deviation. The standard deviation of a data set basically calculates how much the data points varies from its mean or its average. So basically it takes the average price of the stock throughout the day, and it subtracts each value from it, and it calculates how much varies from the actual mean. So we can thankfully also do that manually over here. So we could just type in the equation and it'll calculate it for us. So right here it says the standard deviation is equal to, of this data set, is equal to standard deviation of y1 equals to 1.089. Let's just round it up. I'm going to take away the data points away for a little bit. So we just have this line. What we're going to do is we're going to go through each point. So at 2, the line says the stock should be at $1.46. We're going to take that $1.46 and subtract it by this value over here so that we can get a line that is offsetted by this value over here. So let's do that. Let's calculate that. So let's take at 1 point. So let's do 1 in this case. So at 1, so at 1 hour after market open, the stock should be at $1.13. So let's do that. So $1.13. 13 cents. That's the coordinate of 1 hour after the market opens of the line of best fit. So let's subtract 1.131 minus 1.089. And what we'll get is 0.042. So the bottom line of this channel, so the line that goes like that, should be 1 and 0.042. The price point of the lower channel 1 hour after market open should be 4 cents. So because it's the same slope as the line of best fit, what we can do is we can write the slope, which is, so y, let's do sub low for lower line, is equal to 0.330333x plus b. So we're going to use this point for this data. So x equals to 1, right? So we're going to write 0.330333x, oh, oops, times 1 plus b equals to y, which is 0.042. We can then, so anything times 1 is just anything. So we just have 0.0333033 plus b equals 0.042. We subtract this number to this side, 30333, bam and bam, and we get negative 0.288333 equals to b. So the equation for the lower line would just be the slope, so 0.333x minus 0.28833. So that's the lower line. So I have it over here. That's the lower line, right? And we do the same thing for the top line. So instead of subtracting 1.131 by the deviation, we're going to add it instead. So we're going to do, so the point of the linear trend, so over here is 1.13. So 1.131. Instead of subtracting the deviation, we're going to add it. So 1.131 plus the actual deviation, which is 1.089, and we get 2.22. So 2.22. Instead of the price of the stock being $1.13, it will be $2.22. So we'll do the same thing. So y top is equal to the slope. So it has the same slope as the line of best fit. So 0.330333x plus b. We plug in the same value. So y is equal to 2.22 and x is equal to 1 plus b. And, simplifying this equation, we get, b is equal to 1.889667. So I have it already over here. So let's graph these points. So we have this channel. What this channel says is that the middle line, so the line of best fit, is where the stock will most likely stay. It's where the stock will most likely reside, as it's essentially the average. The tops and bottoms lines are where the stock will rarely go. So let's put the data back on. And as you can see, interestingly enough, every time we come in to the top of this channel, we have a major rejection down to the median. And anytime we come close to the bottom channel, we have immediate rejection to the top. So that's how you calculate the linear regression channel. Let's go on to the actual charts. So here I'm in the Thinkorswim platform. You can add the linear regression channel indicator by going into Edit Studies, searching up linear, and clicking linear regression channel 100 and linear regression channel 50. You can then go into the settings and change the color of the middle line to white on both of them to make it easier to read. So here we have this channel. As you can see, the middle line is the line of best fit for the stock, and the top lines depict how much the stock varies. What might be different from us calculating the market is there's one more set of lines at the top, and that's basically more information to where a stock might go even further. So here's Amazon. As you can see, whenever we came to the tops or bottom channels, we usually bounced. So right over here, we came to the first top channel over here, and we kind of bounced back to the middle. We went back again, came right back down. We sort of broke above it, but we didn't have enough buyers to keep continuing up, so we sold all the way back down over here. We had a major bounce over here, or we had a minor bounce over there. We came all the way down here, and we went all the way back here, rejected, came back down, came back to the lower deviation, and we basically did that throughout the entirety of Amazon's history to the current date. So over here is like a major one. We sorta were there. We went halfway, but we didn't have enough strength, so we bounced back to the middle. And now we're having consolidation at these middle lines. Now, this isn't in just Amazon. There's some stocks that follow this channel very, very well. So one example that works really well with the linear regression channels is Facebook. So here, Facebook is in a very upward trend, as shown by the linear regression channel. And every time we came to the bottom or the top of the channel, we always bounced back up to the median, or even sometimes above it. So here's the major ups and downs of Facebook, and notice how they're very close to the linear regression deviations. Let's do GME or GameStop. GameStop also currently is following it, but it's just not as well. So over here we squeezed all the way up here, we came back down, we went to the middle deviation, had a lot of consolidation, we went to the top channel, consolidation, went to the top channel, sold down to the median, and now we're just at a consolidation. And this can be seen with pretty much every stock. For the massive ranging stocks, this is very true. So like as you can see in this period of AMC where there wasn't really much volatility, we were in the middle of nowhere. But when we did bounce, we usually were rejected at these top and bottom deviations. So we can apply this indicator to ETFs to also get a general view of the overall market. So here is the SPY. So let me clear my drawings. As you can see, it works very well. So we come over here, we went to the bottom channel, we bounced, came to the bottom channel, bounced, went to the top channel. We repeatedly kept on bouncing there. We came down, bounce, bounce. So we had a bounce over there, we had a bounce. Here it was sort of in the middle of nowhere, here the same thing. But we had a bounce over here, and we're coming close to this $443.60 mark. So as you can see, it's very good. And there's one more thing I want to talk about, and it's the time frame at which this indicator resides in. So the current chart shows the linear regression channel on a 4-hour 180-day chart, meaning that the data points taken by the linear regression trend is only a 6-month period. If you wanted to assess the market in a wide time zone to take into consideration, say, recessions and huge market downtrends, you can increase the time frame for your charts. So in the modern economy, normally recessions happen every 10 years or so. So from the 2000 tech bubble crash to the 2008 housing market crash to the recent 2019 pandemic crash. As you can see, price of the SPY is pretty much at the linear regression trend. So we essentially came right to that channel, and we're starting to bounce. Now, this doesn't mean that it's gonna come all the way down to this level or the median, but it is showing that right now, as of now, the market is very oversold. So let's move on to how you can use a strategy to find stocks to trade. So you're gonna go to edit tabs again, and you're gonna type in exponential moving average. So moving average exponential, you're gonna click that and just click apply. And I'm gonna go back to the 4-hour 180-day chart. So what you're gonna try and find are stocks with an increasing channel that is close to the bottom linear channel trends. So over here, the SPY is an actual really good example. So we're approaching, for the SPY, we're approaching this bottom channel. But obviously, you're not going to just buy in at the price of $443.60 because that's like trying to catch a falling knife. What you would do instead is you're going to wait for moving average, so this blue line, to start pointing up. So let's look at the previous time frames. So over here, right, we had a massive sell-off. The exponential moving average is still pointing down. Enter over here just because the exponential moving average is starting to point up. So that would be your entry. And for this example, the win to lose ratio isn't the best, but let's try and find other stocks that have this. So Tesla. See, Tesla isn't a great example because we're already in a downtrending channel, and we're pretty much at the top linear regression trends. Perhaps Apple. So Apple is the same. We're in the top deviations of the linear channel. So that's not the greatest example. AbbVie had a pretty big downtrend. So AbbVie. Yep, this is a really good stock to watch. So as you can see, we're in an increasing channel, and we had a massive sell-off to the deviation, to the linear regression trend. What you would wait for is a confirmation by the exponential moving average to start pointing up. So most likely the exponential moving average would start going sideways and then would start pointing up, and that's where you would want to take a position and trade it to the middle line. You know, maybe you can take some off at the middle line and then try and swing it up to the top deviations. Let's look at, so one more stock that I'm looking at is Fidelity. Fidelity is barely in an uptrending move, and we're pretty much at the bottom of the channel. And right now the EMA is very confusing. So over here we had an uptrending EMA, and over here we had an uptrending EMA. So you'd have to be a little bit more careful and watch for signs of an actual higher high, higher low scenario in order to take a position. But, you know, according to the linear regression channel, Fidelity, as of now, is at a very good deal. So you'd find stocks with an increasing linear regression channel which are at these deviations. That's a very good strategy that I found success with. And with that being said, thanks for watching the video and have a wonderful day.